Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is February 18th, 2025. Good morning, everyone. We have a lot to cover today, so grab your coffee and settle in as we dive deep into the latest market updates and stories that are stirring discussions on Wall Street and beyond.
Let's start with a quick market overview. The S&P 500 is trading at roughly 6,115.3, showing a marginal decline of about negative 0.1%. Over at the Dow Jones, we see it trading at around 44,486.3, which is down nearly negative 0.2%. The Nasdaq isn't far behind, posting levels at around 20,024.9, reflecting a drop of about negative 0.3%. Interestingly, the Russell 2000 is trading positively at roughly 2,284, demonstrating a slight gain of approximately positive 0.1%.
On the cryptocurrency front, Bitcoin is holding at roughly 95,924.66, nudging up by about positive 0.1%, while Ethereum is a bit softer, trading at roughly 2,694.168 and down by about negative 1.8%.
Now, while these declines are relatively minor, they set the stage for today's broader conversation on market trends. What we're witnessing is a market that's showing pockets of resilience, even against slight pullbacks. It's almost as if the indexes are in a brief momentary pause, waiting for that next big catalyst. And that catalyst might just be emerging from some unexpected corners of the financial world.
Let's move into a deeper dive into some major market trends that have caught our attention. One of the fascinating narratives that has been gaining momentum lately revolves around cryptocurrency. Anthony Scaramucci, a name that's been buzzing around Wall Street, has been in the headlines repeatedly. Last year, he emerged as a hot manager on Wall Street thanks to his bold crypto bets. Today, Scaramucci is boldly projecting that Bitcoin will surge to a staggering $200,000 within this year. That's quite the bullish outlook given that the cryptocurrency space has been relatively volatile.
According to him, actions such as the introduction of Trump's meme coin and several crypto-related initiatives have, in his view, slowed down what he calls positive crypto regulation. Now, whether you're a diehard crypto enthusiast or a skeptic, his commentary certainly adds fuel to the debate on regulatory impacts on digital assets, and it leaves us wondering, is the market mispricing the regulatory headwinds, or are we genuinely on the brink of a major rebound in the crypto sector?
In a similar vein, while digital assets spark fervent debate, traditional equities have their own stories. GameStop, a name synonymous with modern market culture, continues to make headlines. The company's stock has extended its rally, bolstered by a strategic plan to sell off some international operations. What's particularly interesting about this development is that it appears to be a decisive move to streamline their operations. GameStop's store footprint in Canada and France has been contracting over the years, with Canadian sales constituting just over 5% of the total. This strategic pruning seems designed to refocus the company's efforts on core markets. And let's be honest, when a video game retailer with such a storied history in the meme stock era starts trimming operations, you know there's a serious play going on behind closed doors.
It almost reminds me of that joke about how GameStop isn't just about selling games, but about selling a dream. A dream that even in today's digital era, the brick-and-mortar model can still reinvent itself.
Switching gears to central banking insights, the European Central Bank's Cipollone has shared important remarks regarding monetary policy. In his recent comments, Cipollone emphasized that policy rates remain the primary tool for adjusting the monetary policy stance. However, he also acknowledged that quantitative tightening plays a significant role in influencing overall financial and financing conditions. His cautious tone suggests that while the ECB is committed to its measured approach, the interplay of multiple tools might be necessary as the economic landscape continues to evolve. This insight is particularly valuable for investors who keep a close eye on global monetary policies, and it raises an intriguing question. As central banks around the world reconsider their strategies, how might these adjustments ripple through emerging markets and ultimately impact our portfolios?
Now, diving into corporate transactions, Infinera Corporation has announced a significant development. The company, which trades under the Nasdaq ticker INFN, is set to be acquired by Nokia Corporation. The deal is anticipated to close on or about February 28, 2025. This pending acquisition signals a strategic rationale behind consolidating strengths in the telecommunications infrastructure space. For industry observers, this represents yet another trend where tech companies are strategically aligning to capture market share in the evolving digital landscape. While mergers and acquisitions have long been the order of the day, each announcement like this nudges us to ask how such consolidations will shape competitive dynamics in the long term.
This brings us to another crucial set of stories surrounding Medtronic, a global leader in medical technology. Medtronic recently reported that its profit exceeded analysts' expectations, attributing the strong performance to a newfound growth in its heart surgery device segment. The company is now beginning to see the tangible results of its investments in new products. For investors, this signals that even in healthcare sectors influenced by regulatory pressures and evolving market dynamics, innovation continues to fuel growth. When you think about it, it's somewhat analogous to a heart surgery itself, a delicate but high-stakes operation where success is measured in both immediate recovery and long-term stability.
Before we broaden the circle of our conversation to cover additional stories, let's pause for a moment and acknowledge the recurring themes. From cryptocurrency forecasts coming from unexpected corners to strategic corporate maneuvers and central bank policy adjustments, what stands out to me is the interconnectedness of seemingly disparate segments of the market. Sometimes I feel like we're trying to solve a jigsaw puzzle where every piece, be it a tech acquisition or regulatory insight, fits into the larger picture of global economic dynamics.
Speaking of interconnected stories, let's delve into a comprehensive rundown of some essential news items making waves today. We have 10 key stories that I want to unpack for you in detail.
First, it's hard to overlook the incessant buzz around Anthony Scaramucci's crypto commentary. His repeated predictions of Bitcoin scaling to $200,000 this year have become a recurring headline. Over the past weeks, his remarks have echoed across multiple news stories, each reiterating his belief that despite regulatory delays, partly due to actions like Trump's meme coin, the underlying fundamentals could spur a dramatic rally in Bitcoin. But is this optimism grounded in any measurable data, or is it more speculative bravado akin to a well-timed punchline at a finance conference? For those of you tracking the crypto markets, this is certainly one topic that merits close observation.
Next on the list, we have multiple reports concerning GameStop's continued stock rally. Not only is GameStop extending its run higher, but its strategic decision to sell off some of its international operations has been featured repeatedly in the news. The fact that the company is narrowing its focus on core domestic markets while divesting from operations in international regions like Canada and France suggests a clear strategic reorientation. It appears to be an attempt to maximize profitability and streamline its business model, especially in an era where digital transformation is non-negotiable. Investors might wonder, could this be a turning point for a company that, just a few years ago, was the poster child of internet-based trading trends?
The third major story comes from the European Central Bank, where Cipollone's comments on the use of policy rates and quantitative tightening have sparked interest. By emphasizing that policy rates remain pivotal for adjusting monetary stances, Cipollone has effectively highlighted that despite the evolving complexities of global finance, traditional monetary tools are still very much in play. His insights invite us to think about how shifting from rate adjustments to a multifaceted approach might recalibrate investor expectations, especially in a world where central banks often seem to be in a balancing act between stimulating growth and curbing inflation.
Our fourth set of headlines comes from the technology and telecommunications arena, where Infinera Corporation is at the center of a high-profile acquisition by Nokia. This deal, set to finalize by the end of this month, underscores the ongoing consolidation in the tech space, particularly in telecommunications infrastructure. For market watchers, this acquisition not only reflects the strategic moves companies are making to bolster their competitive edge, but also raises questions about the future of network technology and how these consolidations might accelerate innovations in the coming years.
Turning our attention to healthcare, the news from Medtronic is both promising and instructive. The company's latest earnings, driven by robust performance in its heart surgery device segment, have exceeded analyst predictions. Medtronic's story is a reminder that even amidst market uncertainty, sectors such as healthcare continue to push forward with innovation and growth. The fact that Medtronic is beginning to see the rewards of its strategic investments in new products bodes well for its future prospects. It's a classic case of long-term strategic planning paying off in the short term, much like a well-executed play in a tightly contested game.
In addition to these core stories, we also need to consider the broader context in which they're unfolding. For instance, the mixed performance in the equity indexes, coupled with modest gains in select segments like the Russell 2000, suggests that investors are becoming more discerning. They're perhaps seeking opportunities in sectors where there is both resilience and innovation, an observation that is echoed across the market trends we're discussing today.
Now, transitioning into our detailed sector analysis, let's take a closer look at the technology, energy, and finance sectors as they relate to the news on our radar. In the technology space, the Infinera acquisition by Nokia is a sign of broader consolidation trends. The telecommunications industry is experiencing rapid changes, with companies no longer content to merely compete on scale. Instead, there is an increasing focus on integrating advanced technology like 5G networks, enhanced data transmission capabilities, and cloud-based solutions. With Infinera's cutting-edge optics technology now in the crosshairs of a company like Nokia, we could well see accelerated innovation that might redefine network infrastructure on a global scale. Investors need to ask themselves, in a world where connectivity is king, how do these strategic acquisitions fortify the technological backbone of entire economies?
Meanwhile, in the realm of energy, while there weren't any direct headlines today linking energy prices to specific market actions, one must remember that the global energy outlook often serves as a silent driver of market sentiment. With traditional energy markets experiencing fluctuations and renewables gaining steam, there's an underlying dynamic of change. This broader context often interacts with financial markets in subtle but profound ways. For example, when central banks adjust their policy rates, or when geopolitical tensions impact oil prices, the ripple effects are felt across the board. And while we may not have a headline on energy specifically today, it is an essential backdrop against which many of these other stories play out.
On the finance front, the commentary from the ECB's Cipollone is a clarion call regarding monetary policy. His reaffirmation of the centrality of policy rates combined with quantitative tightening measures highlights a strategic balancing act taking place at some of the world's most influential financial institutions. For investors, the implications are vast. A shift in monetary policy can have a cascading impact on everything from bond yields to equity valuations. It's that intricate interplay that often makes navigating the financial world both challenging and fascinating. And if you're like me, sometimes it feels like trying to juggle flaming torches while riding the unicycle, risky but with the right balance. Tremendously rewarding.
Beyond these sector-specific analyses, we must touch upon the global market implications. Today's stories, while seemingly distinct, are part of a vast and interconnected web of global economic activity. The regulatory uncertainty in the crypto sector, for instance, isn't just a domestic story, it's a global narrative. How one country responds to digital assets can influence investor sentiment worldwide. Similarly, strategic moves in the technology sector, like the Infinera and Nokia deal, have reverberations that extend far beyond the confines of any one market. They signaled how nations and corporations are preparing for a future where connectivity, speed, and data are more valuable than ever before.
On the global stage, central bank policies, particularly those coming from Europe, are vital in setting the tone. Cipollone's assessment is a reminder that despite the dazzling pace of technological innovation and the unpredictability of crypto markets, the fundamentals of monetary policy remain a bedrock for the world economy. For global investors, this means being attuned to shifts in policy that could affect not just the domestic economy, but also international capital flows and the relative attractiveness of emerging and developed markets. It's these intricacies that keep us on our toes and make global market analysis such a rich field for discussion.
Now let's dive a bit deeper into some expert insights and predictions. With all these developments in play, the cautious moves by central banks, the transformative strategies in tech and gaming sectors, and bold predictions in the crypto space, it's fair to say that the market is poised on the brink of intriguing changes. For those who have been following Anthony Scaramucci's crypto commentary, his projection that Bitcoin will scale to $200,000 this year is a provocative forecast. Historically, markets have a way of defying even the most confident predictions, but it's hard not to appreciate the audacity of such claims. Is this just wishful thinking dressed up in market bravado, or is there a kernel of truth in the belief that the crypto market is about to make a giant leap forward? That's a question I'd love to hear your thoughts on.
Looking at GameStop, the repeated news about its strategic operational streamlining coupled with a sustained stock rally signals that even the most unconventional players in the market can reinvent themselves. It's almost like watching a phoenix rise from its own ashes, a reminder that sometimes a radical restructuring can be what's needed to reignite investor interest and drive long-term growth. And I have to say, that story adds a bit of levity to our otherwise serious lineup of news. Who would have thought that a company synonymous with memes and weekend trading frenzies could morph into a model of strategic cleanup?
Another angle to consider is the impact of these stories on our investment strategies. For instance, with indicators like the S&P 500 and Nasdaq showing slight declines today, one might wonder if these are temporary blips or harbingers of a broader market correction. The nuanced performance of the Russell 2000 hints that smaller companies might be faring better in the current economic environment, perhaps due to their ability to pivot more quickly. This naturally leads us to ponder, are we witnessing a shift where the nimble and the small become the new darlings of the market, outpacing their larger counterparts who might be bogged down by bureaucratic inertia?
From an international perspective, the potential ramifications of ECB policy recalibrations remind us that the European market is not insulated from global economic shifts. Changes in monetary policy in Europe can influence currency valuations, trade balances, and even investor behavior across the Atlantic. This global interplay underscores the need for a diversified portfolio and a keen eye on evolving central bank narratives.
Let's also consider the broader technological revolution hinted at by transactions like the Nokia and Finera deal. The pursuit of enhanced connectivity and network infrastructure is a global imperative. As businesses and consumers alike demand faster, more reliable internet services, companies that are at the forefront of these technological shifts are likely to see substantial rewards. Investors should ask themselves, what impact will these technological investments have on the competitive landscape in the coming years? And how might this, in turn, drive the emergence of new industry leaders?
As we round off our conversation today, I want to leave you with a few thought-provoking questions. With Anthony Scaramucci's bullish crypto narrative and GameStop's strategic repositioning in full swing, are we on the verge of a paradigm shift in how we view both digital assets and retail equities? Is the traditional market narrative evolving to embrace a blend of innovative strategies and aggressive technology investments more than ever before? And perhaps most importantly, how can we best position our portfolios to capitalize on these dynamic, sometimes unpredictable shifts?
Before we conclude, let me summarize the key takeaways from today's briefing. We started with a market overview that showed the major indexes S&P 500, Dow Jones, Nasdaq, and Russell 2000 displaying modest changes, with slight declines in most, while the Russell 2000 managed a small gain. The cryptocurrency market continues its cautious optimism, with Bitcoin showing modest gains and Ethereum experiencing a slight decline. We then explored major trends in the market, notably the bold crypto predictions from Anthony Scaramucci and the operational strategies unfolding at GameStop. The ECB's commentary on monetary policy and the strategic acquisitions in technology by Nokia targeting Infinera and revenue beats by Medtronic in the healthcare sector round out a diverse set of narratives.
Each of these stories, whether they revolve around new technology, redefined operational strategies, or shifting monetary policies, underscores the importance of a nimble and well-informed investment approach.
I'd like to give a special shout out to Pantheon AI, your information co-pilot, for providing the insights and data that help us navigate this complex market landscape every day. It's tools like these that transform raw data into actionable insights, making our decision-making process that much more informed and strategic.
So as we wrap up today's conversation, I encourage you to ponder these questions. What do you think about the surging optimism in the crypto market amid regulatory headwinds? How do you interpret the strategic shifts by companies like GameStop, and can these moves translate into long-term gains? And in a broader sense, as central banks recalibrate their policies, how should investors adjust their strategies to ride these waves of change? I invite you to share your thoughts and questions with our AI co-pilot, and remember, you can always ask questions and engage with us as we continue to explore these developments.
Thank you for tuning in to today's edition of the PAI Morning Briefing. I hope you found our conversation as enlightening as it was engaging. Be sure to join us tomorrow for another deep dive into the markets. And remember, learning shouldn't feel like a full-time job. Have a great day. And until next time, stay curious, stay engaged, and keep those questions coming.